Hello, everyone. I'm Gaia Manukian, Communication Specialist at the Microfinance Gateway. Thank you for joining the webinar on financial services and humanitarian crisis. Before we get started, I'd like to let you know that this is an audio broadcast, which means that you will not be able to use your microphones during this event. However, when we open the floor up for Q&A, you can use the chat box located on the right-hand corner of your screen to send in your questions, and our moderator, Mayada El-Zogbi, will direct them to the speakers on your behalf. During the webinar, at the end of each presentation, we will open up polls, and we kindly ask you to take a moment and answer them. Also, please note that you will receive the recording of this webinar within 2 or 3 days, which will also include the 3 presentations in PDF format in the resources section. Thank you, and here's Mayada.
Good morning, everyone in North America, and good afternoon to those of you joining us from Europe and elsewhere in the world. Thank you for joining this webinar. We're very, very happy to be hosting this event to share with you some of the main findings of a recent World Bank CGAP joint publication on the role of financial services and humanitarian crises. Today is an important day. Of course, it's Refugee Day, so we find it's a good time to share these results. We're also, in this webinar, going to be hearing from other leading organizations who work in this intersection of financial services and crisis-related issues. So as Gaia just mentioned, my name is Mayada El-Zogbi, and I will be facilitating the webinar today. And I work with CGAP, and I was one of the co-authors of the paper with other colleagues from CGAP as well as the World Bank. So this topic of the role of financial services in humanitarian crisis is gaining quite a lot of importance, and that is for many, many reasons. We all know, and we see on the news, and we're hearing regularly the effects of all of the conflicts and natural disasters that are happening in the world. We're seeing people being displaced for longer and longer periods of time. At the same time, there is this overall arching sentiment that humanitarian responses, the tools that are being used today, are not really helping people address or adapt to the increasing severity of these situations. People are being displaced increasingly for longer than 10 years, and yet we are still we're still handing out, they're living on humanitarian handouts, and that is insufficient to really address people's long-term livelihoods. So there is this growing sentiment that we need to be thinking about solutions that are much longer term in nature that really try to address some of the core issues. But of course, I want to highlight that humanitarian crises are not just about war and conflict. We're also seeing quite a lot of natural disasters that are creating very stark realities for those people who are who are the poorest and most unable to deal with these crises. Obviously, not all natural disasters lead to long-term displacement, but nonetheless, they do create either short-term disruptions or major impacts on people's livelihoods. So the paper that we will be presenting today, this joint World Bank CGAP paper, is an attempt to really gather what do we know around this topic so that we can try to embed learning and try to move from repeating mistakes to really scaling what we know works and seeing improvements in how those of us who work in this space deal with these issues. So today we have 3 speakers representing slightly different constituents. We have a speaker from CGAP, we have a donor, and we have a practitioner. And we will begin the webinar with a presentation from Nadine Shahada, who is one of the co-authors of the paper. Nadine Shahada works for CGAP. She represents CGAP's work in the Arab world. She's been working extensively over the last several years with regulators, policymakers, donors, and investors, and national and regional associations. In the last couple of years, Nadine has been focusing extensively on this issue of financial services and humanitarian crisis, working with several of CGAP members, including the World Bank and GIZ, for example, to better understand the lives of poor people impacted by crisis, and also identifying what the development community already knows and what more needs to be done in terms of improving knowledge and practice in this space. Our second speaker is Olivier Mahou, and he is the Global Lead and Program Manager of the Disaster Risk Financing and Insurance Program. It's a joint program between the World Bank and the Global Facility for Disaster Reduction and Recovery. He's been with the bank since 2003, and he's been involved in developing disaster risk financing and insurance solutions in more than 40 countries. He will speak to what the World Bank is doing in this space, honing in on the work that he manages on the disaster risk financing and insurance. Our final speaker will be Thea Anderson. She works with Mercy Corps on financial services and protracted crisis. Mercy Corps, most of us know, is a global development and humanitarian organization. It operates in more than 40 countries. Previously, Thea was Mercy Corps' Director for Financial Services, working on financial inclusion issues broadly and digital financial services. She's also managed a technical team on electronic cash transfers and humanitarian response, and she's been overseeing partnerships with corporations, social enterprises, and technology companies. So the way we were going to manage the webinar is that we will start with Nadine, and then after Nadine, we'll open up very briefly to some questions specifically to her that you will be able to submit through the chat box. We will then have a poll in between before we move on to the next speaker, and then we will repeat this format with each one of the speakers. At the very end, we will have some time for broader Q&A for any and all of the speakers. I think Gaia has already mentioned that all of the attendees are muted, and so you will not be able to ask your questions verbally. However, you will be able to submit them through the chat box. So for now, I will hand it over to Nadine, who will get us started with an overview of the CGAP-World Bank paper.
Thank you, Mayetta. Good morning, good afternoon, and perhaps good evening to the attendees. Thank you, everyone, for joining. Before I delve into the paper, allow me to give you a little bit of background into how all of this work started. As some of you attending might know, Mayetta and I both come from the Arab world, and we've been working there for several years. So when the Syrian crisis started a couple of years ago, we really felt the urge of connecting what we were doing as financial inclusion experts with what seemed the biggest priority in the field. And because we're very rational people, along with our colleagues Peter McConaughey and Matthew Sirsuryan, we basically sat down and asked ourselves this simple question: is there actually a role for financial services during crisis? And we really wanted to focus on that period of time that's essentially crisis is ongoing or very shortly afterwards, because this is where we felt there were lots of questions left pending. And as we moved forward, we got to defining crisis, as Mayetta mentioned, to go beyond conflict and include natural disasters and even climate change, everything that either leads to forced displacement or is strongly affects some communities. So what we did is that we read every single publication that was written over the past 20 years. That's about 130 of them. And that's essentially what you have in the paper today and what I'll be going through. So I'll do that in several stages. I'll give us some context and figures and look into the demand from financial services from a user's perspective. And of course, we focus on essentially the low income and the vulnerable populations among those affected. And then I will delve into the evidence and some of the recommendations that we made. And so to start with some context, as Mayetta said, displacement is on the rise, as you can see it in the chart. And so this chart shows the number of people who are displaced at the end of every year. And you kind of see the orange bar are the people who are displaced internally, so remain within the borders of their countries. Those are the IDPs, and they make up roughly 2/3 of the population. The other third is people who have actually crossed an international borders, so those are refugees or asylum seekers. And so we start with this chart today not only because it's Refugee Day, but also because this is one of the most advanced data sets that we have on people who have been forcibly displaced. And data is, of course, an issue, and understandably, during crisis, people focus on other things than just counting. But so, from what we see clearly, one, the numbers are on the rise, but the second thing that we also see is that the length of displacement also is. What we have seen from the latest research from World Bank colleagues, De Victor and Doe, again, focusing on refugees because this is the data that is available, we are on an average of 10 to 15 years of displacement since the 1990s. So of course that average changes. Whenever you have a crisis that is recent, it goes down, but the trend is towards longer and longer periods of displacement. So the other small precision that I want to do, because those are things that we grappled with as we were writing the paper, to define a little bit more who's the population that we're speaking about. And so as you will see on this slightly complex chart, because unfortunately animations were not working, you have roughly lots of people who cross international borders. Not all of them are forcibly displaced. So for the context of this paper, we really focused on those 85 to 90 million who are forcibly displaced either by disaster or conflict, and the subset of them that are refugees or asylum seekers is roughly 25 million. And the numbers of those who have been forcibly displaced by disasters and crossed the international border is unknown. We presume it's relatively small because the majority of those who are displaced by natural disasters tend to remain within their countries. And so those are 20 to 25 million annually. And then we have an unknown number of communities that have not been displaced but that have been affected. And so those forcibly displaced plus affected communities are the ones that we focused on in the context of the paper. So please do keep that in mind because those distinctions are quite important as we delve into the details. And so before I go on to the questions that we ask on whether there is a role for financial services, the answer was yes, there can be a role that financial services can play. But we also wanted first to think about the demand and what do we actually know about demand. Demand is another area where data is unfortunately missing. So what we did is that we actually looked at the FIDEX data, which, as you know, is one of the most extensive data sets that we have on demand. And to select the countries, we relied on the ACAPS methodology, which actually defines countries that are in crisis according to a set of criteria. Now, ACAPS basically updates that list practically on a daily basis. And so we had to, at some point of time, just take a cutoff, and we decided to take that of IRC as of 2016. And we benchmarked with low and middle income countries because this is where the majority of either conflict or natural disaster happens. And what we could see very clearly is that formal access to financial services was low. So there you can see on the orange bar, that's 24% of people who have an account as compared to more than double that in low and middle income countries. Yet we do see that demand is high, so you have here the reasons for borrowing as they are reported, and you kind of see that the orange bar is practically always higher than the blue one, which again is low and middle income countries. And the biggest reason for why people borrow is actually health or emergencies. And so in the absence of kind of formal access, what we actually see is that people tend to rely on informal services. So strikingly, when you compare low and middle income countries with severe humanitarian crisis, you see that people there save roughly the same, but 5 times less in a formal way. And that's where our role comes in, where we can think about how we can formalize a bit more those services and get them to the people who are obviously already using them. And we'll get into the evidence in a minute. But I just wanted to point to the fact that this is what we know about demand, and this is the best of our knowledge to date. Colleagues from the Social Performance Task Force and UNHCR, when looking at financial services from the perspective of financial service providers, attempted a little bit to do a categorization according to the displacement period, essentially focusing on refugees and IDPs. And so what you have on this chart is the displacement period, and what we think is the demand for financial services. So what I want to say and highlight is that first, we don't know if this chart reflects the reality, but we assume that this is the case. And second, what we would love, of course, is to be able to quantify how many people are in each of those boxes so that we can assess the demand and so that financial service providers and private sector can actually step in to develop products, etc. And that's where it gets tricky, because then you really have to kind of take that framework and apply it on a case-by-case basis in each country. And situations, of course, tend to vary drastically from a country to another. But enough on that, let's focus on the evidence and what we actually found. And so, as I said, financial services do play a role in mitigating crisis. We looked at different products. The one that most obviously was in use in any context, be it conflict or natural disaster, was remittances. And that's kind of normal, because every time something happens, whether you know people or whether you do not know people in the affected country, you just want to help. That's the kind of first human instinct, I would say. And so remittances that are actually able to get to the affected communities help drastically in coping with shocks, and they do stimulate economic activity at the community level. The second thing is savings. So we have seen that people who are able to save actually went through shocks in a much smoother way. And so as financial inclusion experts, we tend to focus a bit more on formal access to financial services. For this paper, we also looked at informal savings, so everything related to self-help groups or savings groups. And we do see that those two have an important role to play in increasing the resilience of the affected communities. The third big product that actually had quite an impact was insurance. And it does reduce vulnerability, but it comes with its own set of issues in terms of acceptance. And so disaster insurance, for instance, is great. There are still issues in terms of product development and product uptake. There's another type of insurance that goes beyond the beneficiary, that's more at the country level. And Olivier will soon get into the details of such type of products. So credit is perhaps the one product that has been tested more, but on which we were not able to find rigorous enough evidence, and it clearly needs to be further researched. So as we have seen from the data and from other research stemming today from Lebanon or Jordan, for instance, on refugees, credit do play a role. Now, we were wondering whether it is actually helpful if people cannot actually get to livelihoods. And so that's an area that, to our opinion, remains to be researched. The big opportunity that we see today is that as humanitarian assistance, which is more and more shifting towards cash transfers that have proven to be more effective, as this shift happens, we thought there is a huge opportunity to move beyond what we see today, is that the cash transfer is done, beneficiaries cash it out and go on with their financial lives in cash. So as the shift to cash transfer happens, and as we think shift to digital transfer happens whenever this is possible, there is a big question mark on what is the link to financial inclusion and how can we link those cash transfers that are very short-term in nature to something that's a bit broader in terms of development agenda. And so that's what we think is a huge opportunity on which, as a community, we probably should be focusing our efforts in the coming few years to bridge a little bit this humanitarian and development divide. And so the last thing that the paper presents is essentially the barriers to more financial inclusion and some of our recommendations. So those are not necessarily prioritized the way you see them here, but essentially the first thing that you need to do, and we saw it through remittances, through humanitarian transfers, this is the first thing that happens. With that, you need robust payment systems. You need access points, you need liquidity in those, you need connectivity, and you need them to be prepared for disaster or conflict. And so that was number one. Number two, or perhaps number one even, is regulation. Regulation is a barrier, notably everything that relates to compliance and customer due diligence, everything that relates to digital transfers or mobile wallets, and allowing a large influx of people to benefit from financial services requires at least crisis-adapted regulations that you can put in place if an emergency happens. So what we've seen in Haiti, for instance, after the earthquake, is that some institutions had to transport cash by helicopters. In terms of preparedness, what we see in Palestine is that ATMs are now solar-powered, so that in case of power cuts, the liquidity can still be accessed and they can still function. The third big element is incentivizing both the private sector to go after that segment of the population and the humanitarian organizations to basically embed financial inclusion in their objectives. And it just doesn't come naturally, and this is where we think we have a role to play also in fostering a dialogue among those two communities, the humanitarian on one side and the development experts on one side, to make this work in the hopefully near future. The other thing that would be great is developing financing mechanisms, because liquidity is always an issue, whether at a country level or at a local level. And I will not get into this since Olivier is going to have his presentation dedicated to that. And of course, the last thing is conduct more research. We've been working on this paper for about a year, and practically every time you touch upon a topic, there's lots of questions that arise and lots of things that we still do not know around demand, around products that have high potential, typically like insurance, around products that would work beyond cash transfers if they are digitized to lead to financial inclusion, and whether you can actually get there if financial inclusion is useful for livelihoods and longer-term development. So this is really at a very high level. You'll find a lot more information in the paper, and I would like to stop here to leave enough time for Q&A. Mayada?
Yes,
yeah.
Thank you so much, Nadine. At this moment, I'd like to introduce two things. One, we want to open a poll. We'd like to get your views on one question. And then also, please, I'd like you to submit questions that if you might have specific questions, Nadine, that she can take as people are voting. In the meantime, while questions are coming in from the audience, Nadine, I did want to ask you a question, which is related to, you know, it's great that CGAP and the World Bank did this paper, and these recommendations are quite interesting, but what do you see as the immediate logical next steps? Who and also who should lead this effort? I mean, obviously there's a lot of actors involved, and where do you see leadership coming from?
Thank you, Mayetta. To answer this question while the polls are being taken, I think we all have a role to play. Obviously, donors have a huge role to play because they influence a lot the response that happens afterwards, but also because they can help in preparedness. There's also a role for local governments, and I would say what is very important is that we all coordinate our efforts, because this is going to happen more and more frequently. We know it. That's just the world we live in. And I think it's very important that we're all aware of that and doing the maximum we can to answer remaining solutions, test things that actually work, and that we can scale up. So I don't know if you want me to answer some of the questions or if you want to continue with the polling right now.
So I would like to, I haven't seen any questions come through yet, so I'd like to keep the chat open, and please submit your questions.
I see some questions actually in the chat box. So perhaps I'm the only one to see them, but I can take a couple of them because I think there's another minute for the poll to close.
Yeah, please go ahead, Nadine.
So first question is about insurance, surprisingly more complex, but plays a more important role than credit, which is an easier product that is not important. So let me specify that we're not saying that credit is not important. We really looked at evidence and rigorous evidence. Of the 130 publications that we have reviewed, we're actually speaking of about only 20 that are rigorous evidence. And of those, practically none touches upon credit, although indeed it's an easier product and has been rolled out more often. And so we do not say it's less important. We're just saying the evidence around how it works, whether it needs to be sequenced, for whom it's more important, and what are its actual effects. This we do not know with solid enough evidence as compared to other products. I have another question around insurance applicable to disaster that are pronounced as force majeure. I think I will let Olivier answer questions related to disasters, because that's what he's going to focus on. I see some comments around, again, the use of credit to fund like value chains within local communities, etc. At CGAP, I think we're going to continue working on this topic in the near future. So please, if you have ideas like that, do not hesitate to reach out to us. We're very interested in continuing to enrich the knowledge on this topic. Very good, relevant question around KYC, so know your customer. Is there good examples for solutions for migrants? And that's where, if you remember a little bit earlier, when we looked at the population that we're looking at, we have not investigated migrants specifically, and so perhaps this will come in the future. But for now, for refugees, yes, we have had some good examples. And I think the one that we can speak best of is the one in Jordan, where essentially the UNHCR ID is recognized officially by the central bank as an ID that allows access to mobile wallets. So that can happen, and that actually happens, and those are solutions. There is an upcoming paper specifically on this topic that will be stepping out of the GPFI, the Global Partnership for Financial Inclusion. We should probably have the results in about a month or two, and with help around the brainstorm and collecting information from the field on this topic. Now, there's plenty of other questions. Mayetta, I don't know if you want me to keep on answering them.
No, that's what we'll do, just so we have enough time for everyone else to speak, and then those we can get to at the very end. We'll spend some more time on that. And then also we will post some responses to the questions that we don't get to today. We'll put that up on the website. So I would like to hand over to Olivier, but I'd like to also point your attention to the polling results. And they're no longer visible. They were visible for a few minutes. And can we make them visible again? Okay. And so it's actually quite. There's no strong response. And I was wondering, Olivier, if you could just before you start your presentation, just to react a little bit. You do represent the World Bank. You are, in the eyes of many of us, a donor. And I'd like to get your reactions to the poll before you start with your presentation. Hand it over to you, Olivier.
Thank you, Mayada. Let me just open the polling and comment on that. But first of all, I'm not sure we can say that the World Bank is a donor. We, of course, are a multilateral bank. We're working a lot with donors. But as you know, our main business is to help countries through lending operations to increase their, to help them develop. And of course, humanitarian crises are a major issue in terms of development, and disasters, as you mentioned, Nadine, in your presentation, are also a factor to worsen, in fact, humanitarian crisis. In terms of the poll, again, I can see there is no clear, I would say, results, since the percentages are quite diverse. So maybe I can go to my presentation, and maybe we can go back to the poll in a few minutes. First of all, thank you, CGAP, for organizing this event, and I'm very pleased to be able to present what the World Bank is doing, particularly on a subset of risk we're talking here about, which is about disasters. And as I said, it's one of the many sources of risks that could worsen humanitarian crisis. But interestingly, some of the principles I'm going to discuss today have been to some extent applied now in the context of the crisis. Just to give you a kind of example, or kind of timeline, I would say, we've been working on disaster risk finance in the World Bank for about now 15 to 20 years. And over the last 10 years, there was definitely a need to structure a bit better our response, simply because our clients, country clients, have been asking more and more for support, financial and technical support, to help them deal with natural disasters. And again, as I said, some of the concepts have been highlighted in the context of the humanitarian financing. So let me briefly present the group I'm leading, which is again a small group in the World Bank dealing particularly with disaster risk finance. And on that slide, this is to some extent what we're doing. We are trying to increase the financial resilience of the countries. Our main counterparts are Ministers of Finance. So this is really at the sovereign level, at the country level. Of course, we're helping them to reach out to the ultimate beneficiaries, but our main counterparts are governments. And in that context, what we've been doing is really to try to provide analytical and financial services and convening services to some extent to help them address this issue of disaster risk finance. The graph you have in front of you is a result of, I would say, 10 years of, working with countries, where to some extent key issues are summarized here, where sometimes governments want our help to deal with rapid response financing. As a Minister of Finance, they want to make sure when there is a disaster, they have enough funding, they have enough liquidity in their budget to respond to the needs of the line ministries and, of course, ultimately to the beneficiaries. Other governments may ask us to help them, I would say, smooth the impact of major disasters in terms of the budget. And of course, this is particularly true for small island states or small states, where a small disaster can impact significantly GDP up to 200 and 300% for small Pacific islands, for example. But also, large governments or large countries may also be impacted by disasters in terms of their budget. And then there are three sets, I would say, of beneficiaries we also helping through government. One, of course, are the poorest, and this is related to livelihood, and I will explain that slightly a bit more later. The second set of beneficiaries are farmers and herders, where we are helping governments to increase the resilience of their farmers and herders, and this is about agriculture insurance as one example. And the last one is about what we call property catastrophe insurance, where we're trying to help usually domestic insurance markets to develop. Since when you develop domestic insurance solutions, private sector solutions, you're going to ultimately reduce what we call the contingent liability governments are facing when a disaster strikes. So it's a way to share risks among the private sector and the public sector. And interestingly, those four, I would say, groups have to be informed by sound and technical analytical work. It goes back to what Nadine was saying. It's very important to be able to demonstrate through analytical studies what would be the potential impacts of doing something or not doing something. So the analytical work is quite important. And global partnerships are also quite important because there is definitely an increasing need and I would say interest including from donors, big donor partners on that specific topic. So let me quickly highlight that we're working in more than 50 countries. So what I'm going to present again is a summary of what we've been doing, and this is a diverse group of activities. If I take, for example, from the left-hand side, countries in Latin America, helping Colombia, for example, to deal with their insurance of public assets. When following the big flood in 2012 in Colombia, the government realized that 30% of their budget exposure and their budget losses were related to public infrastructure. So this does create major liability on their balance sheets, on their budget, and this is something that can ultimately impact the long-term development. And on the other extreme, you have small island states like the Caribbean islands working together, developing a new facility called the Caribbean Facility 10 years ago. In fact, this year is the 10th anniversary of the facility, helping them again to access immediate liquidity when a disaster strikes. And moving from Latin America to Africa, we're doing some work in Kenya, Uganda, Mozambique, focusing particularly on the poor and vulnerable related to social protection, related to livelihood, and also related to agriculture. And then on the right-hand side of the slide, we have some work ongoing in Vietnam, Southeast Asia, Philippines, where again, these topics are quite important given the high exposure of those countries to wide type of disasters, tropical cyclones, earthquakes, and others. So in that context, I'd like quickly to go back to the basics after this kind of quick introduction, and again explain why, in fact, this is an important topic for the World Bank. Because as we all know, disasters will impact, and climate change will have an impact on development. And this has an impact particularly on the two, I would say, twin goals of the World Bank in terms of extreme poverty and in terms of shared prosperity. So this is why this topic has grown over time and definitely has a big impact on our work program right now. As I said, disasters do have an impact on public finance, so this is more the macro level, if you wish, and beyond the economic impact, which is usually the way we see it, it's also important to consider the fiscal impact. Again, you could imagine in a well-diversified country, the kind of developed country, most of these kind of economic losses will be borne by the private sector. Of course, it's not the case in developing countries. Ultimately, either the government or the affected households would have to bear the costs of a disaster. And this is something also that can be quite significant. And ultimately, as mentioned in that slide, this can have an impact on the credit rating of the country, as recently demonstrated by a study by Standard & Poor's. Now, moving from the macro to the micro level, this has an impact on poverty. And for a long time, the impact of disaster was measured in terms of asset losses. And we estimate that every year, on average, the impact of disasters is about $300 million in terms of asset losses. Now, asset losses may not fully capture, in fact, the social impact of disasters. And a recent study done last year by the World Bank showed that if you try to assess the well-being losses to some extent, the losses in terms of drop in consumption, you can demonstrate that the overall annual impact of disasters is estimated to $520 billion, 60% more than the, I would say, asset losses, simply because a $1 loss for a small a poor household will have a much larger impact in terms of social welfare than a $1 loss for a much richer household. So this taking into account the well-being impact is quite important, particularly when we focus on the poor and vulnerable households. Now, the key message I'd like to convey here is that there is a need for a kind of comprehensive risk management approach, and in that case, comprehensive disaster risk management approach. And it has to be, to some extent, a shift, I would say a gradual shift from ex-post disasters to ex-ante, I would say, preparedness. And there are two ways to do it, particularly in terms of ex-ante. First, you want to avoid disasters, and there is definitely a need for higher investments in risk mitigation, in risk reduction. Investments in dams, retrofitting buildings, and making sure that when a disaster strikes, the economic and social impact will be as small as possible. Now, all losses cannot be avoided, and then you need also to be prepared to deal with your economic or fiscal losses after disaster, and this is what we call managing the unavoidable losses. It may be extremely expensive to build dams everywhere, extremely expensive to retrofit all buildings. So the challenge is to find the right balance between investing ex ante and also to some extent to be prepared to respond, financially speaking, to disasters adequately when a disaster strikes. The key message I like to convey is to some extent summarized in that slide, and this applies very well for the ongoing dialogue on humanitarian finances. The key point is really to try to shift from being a crisis responder and becoming a risk manager. And it's not only about financial aspects, it's definitely not only about insurance, it's all type of activities, actions that have to be taken in advance of a disaster to be better prepared. In terms of coordinated plan for disaster action to be agreed in advance. It will be very interesting. You may know that in many cases, in fact, the lack of coordination, even among government agencies, may have a significant impact in the capacity, ability, and speed of the response from the government. So you need to have a kind of a plan to be discussed in advance. What is the role of the Minister of Finance when a disaster strikes? What is the role of the line ministries? The decision-making process also has to be clearly defined based on evidence. And again, in too many cases when a disaster strikes, there is no clear decision-making process in place, which again, we will ultimately slow down the emergency and recovery process. And ultimately, those two activities, a coordinated plan and the decision-making process, have to be supported by a pre-planned financing, meaning as a Minister of Finance, I want to make sure that whatever disaster occurs, I want to be able to respond financially to the needs of my population, to the needs of the line ministries. And this requires some, I would say, financial planning in advance. And this is really where we're trying to focus our attention in our group to help governments think in advance of what will be the economic, fiscal, and social impact of a disaster and how prepared or better prepared they could be, financially speaking, to respond to those specific needs. And just two examples to illustrate that. One is the case in Kenya with the Hunger Safety Net program, where again, helping government to access and to help reach out to the pastoralists through conditional cash transfer is something that has been done and is working pretty well now with simple triggers and rules, this defined in advance. And it's a nice combination of donor financing and government financing. And the second example we could highlight in terms of pre-planned financing is what the government of Mexico is doing, which is of course much more advanced in terms of having set up a dedicated disaster risk management fund. And this fund has very strict rules in order to rebuild infrastructure when a disaster strikes. So there are two interesting examples, complementary examples on how governments have been thinking in advance in order to respond more efficiently and more timely when a disaster strikes their country. So the point here is not to say that there is one single solution. And the optimal financial protection will be a combination of post-disaster financing. There will always be a role for humanitarian finance, international assistance, budget allocation, but also more and more countries are considering ex-ante, what we call pre-planned financing, whether it's insurance, and Nadine mentioned that, whether it's contingent credits, whether it's pools or reserve funds. These are the type of financial instruments that can be used by governments to be better prepared when a disaster strikes. And the main question is really, from a government perspective, to be able to combine those instruments. There are a growing number of instruments being offered by multilateral banks, like the World Bank, by the private sector, like insurance companies. And the main challenge countries are facing is to be able to combine those instruments as efficiently as possible at the lowest costs, again, to be able to respond to any financial needs when a disaster strikes. And usually it's a combination of budget reserves, contingent credit, and ultimately risk transfer, where the private sector can play a role in providing additional capacity. And insurance, again, is a good example we can discuss further if there is any question. Now, this is the first side of the outside of the coin. The other side is how the money can ultimately reach the beneficiaries. One thing is to be able to mobilize funding within the governments. One thing is to be able for this money to be quickly executed by the government to the right beneficiaries. And this is also where we can see bottlenecks, whether because the government cannot really rebuild the public assets, or because sometimes they cannot really reach out efficiently to the affected households. And this topic is quite important, and I will finish on that note. Linking disaster risk finance with social protection programs is a very important topic where the World Bank and other partners have been investing time and efforts, trying to build on existing safety net programs and to scale up or scale out those programs when a disaster strikes, again, to be able to reach out to those beneficiaries affected by a disaster. And a good example, and this will be my last slide, is in the case of Uganda. I could have also taken examples from Ethiopia, but here's the example for Uganda, where the World Bank has been working with the governments and the local communities to try to build a community welfare system. And under this program, there is a disaster risk finance component, I would say a standby component, that in fact was triggered after large rains in 2016, which again helped the government reach out to 35,000 additional households affected by the disaster. So this is really to try to build on existing social safety net programs when they are in place, and to scale them up in the case of a disaster, again, to be able to better channel funding to those to the affected population. So I think my time is over. I will again say that some of the principles presented here are, I think, quite relevant in the context of humanitarian financing. This is really to help governments think as risk manager more than risk and crisis responder. It's a long way forward, started years ago, but definitely is a strong, I would say, commitment from the donor community, from multilateral banks like the World Bank, to help move this agenda forward. And more countries, based on evidence, do appreciate the need to be better prepared financially and not only relying on ex-post donor assistance when a disaster strikes. And I will thank you very much.
Thank you so much, Olivier. So most of you will have noticed that we've just opened the second poll question, so please take a few seconds to respond to that. And then a couple of questions have come in, Olivier, for you that I was hoping you could answer. One person is really inquiring about how what you're presenting relates to conflict settings, and whether any of these lessons could be applied, or whether insurance is actually an instrument that can be used in a conflict environment. Another question relates to how governments actually can access these kinds of facilities with the bank. How is this triggered? Does the bank come to the government? Does the government request assistance? Are they borrowing? Could you explain a little bit more of that mechanism?
So on the first question, as I said in the introduction, I mean, disaster will definitely worsen the kind of humanitarian crisis. And in the context of conflict, what we've noticed, it goes back to the basic risk management principles, when you want to be able to some extent to anticipate as much as possible the impact of the conflict. Anticipate not only financially speaking, of course, but also in terms of operational aspects. As it comes to insurance, I will be then a bit more careful to apply those principles to conflict. Let me be specific about that. Some of the insurance principles can be applied in terms of identifying in advance triggers for payments, or trying to plan in advance the financial impact. When it comes to market-based insurance solutions, by definition, this has to be triggered by, it cannot be to some extent influenced by third parties. And in the case of conflicts, it's sometimes difficult to see what is really a kind of risk, which is to some extent happening, like that, and versus something that can be to some extent managed or can be, I would say, even worsened to some extent by the government. So there are some limitations on that one. On the second question about access from governance, it's important to understand that this kind of work is really part of a kind of ongoing dialogue with governments on disaster risk management. And when we engage with governments on disaster risk management, also on conflict aspects sometimes, it's a kind of set of I would say analytical, technical, and financial tools the World Bank can offer. So it's not only about making a loan, it's not only about buying insurance, it's also about understanding, first of all, their key needs, and then to design a solution. And that financial solution can be a combination of different financial instruments. But ultimately, as I said, it's part of this kind of ongoing long-term dialogue the World Bank is having with each of the countries we work with.
Just one other question that has come in related to the work with insurers in the private sector and also the humanitarian sector. Are you, as part of these facilities, reaching out directly, and in what way are you engaging with the humanitarian sector and with the private insurers?
So let me start with the private insurers. They have a large role to play, and as you may know, the World Bank recently introduced this concept of cascade, which is really to try to leverage as much as possible the role of the private sector, because the needs in terms of development and even financial management of crisis are beyond the capacity of any government, and definitely also beyond the capacity of the World Bank and other development partners. So the role of the private sector is quite critical. Not only in terms of providing, I would say, financial capacity, because the role of insurers is to underwrite and to retain the risk, but also in terms of the technical expertise, because most of the principles we'll be talking about, assessing the risk, identifying the risk, pricing the risk, are tools and, I would say, instruments the insurance sector has been using for decades, if not centuries. One initiative I can mention which highlights to some extent the role the private sector is playing is this Insurance Development Forum called IDF, which is a group of development partners, including the UN, including the World Bank, as well as the private sector, trying to find opportunities to work together in a more structured way, again, in order to be able to address the main challenges we're facing in terms of risks in developing countries. As for the humanitarian sectors, it's a long journey, and there is definitely a need to converge at some point. The last World Humanitarian Conference last year, two years ago, was extremely useful when this concept of humanitarian finance was discussed, and where for the first time there was a kind of very constructive discussion between risk managers like us, humanitarian finance experts, and humanitarians and the humanitarian, I would say, community. So work is still to be done, but there are now new initiatives where definitely we can appreciate the comparative advantage of each of the communities and other, again, to be better able to respond to the needs of our countries.
All right, thank you. There's one other question, and if you can answer this fairly quickly before we hand over to Thea and close the poll. It relates to the poorest countries in Africa where the World Bank works, and the person is asking what would be the advice that you would give in terms of where to start in terms of protection, using financial services to protect against natural disasters. Would it be cash transfer programs? Would it be microinsurance? Would it be contingency funds? Can you speak to how you would sequence or prioritize here?
In a few seconds, because of course it's a pretty complex question, I would say the very first thing we do when we engage with the client on that is really to do some sort of a kind of diagnostic and see exactly what kind of tools the government can already access, whether they have their own budget resources, which of course are quite limited for poor countries in Africa, and also the role of the donors. And in that context, this is then to identify their priorities. If their main priority is first of all to be able to better reach out to the most vulnerable, social safety nets are definitely something that can work. And okay, the example of Uganda, Kenya, or Ethiopia is a good example. When it comes to microinsurance, you need to have at least some sort of domestic insurance market in place, where sometimes it's not the case. So again, it really depends on the country context. And our key, I would say, role at the beginning is to help the country do a diagnostic, to prioritize their needs, and then to offer some solutions, which can be the one you just mentioned.
All right, thank you so much, Olivier. I got a message that some of you are not hearing me well, so I'm going to try to speak a little bit louder. So I want to switch over now to Thea Anderson, who's our on-the-ground practitioner, and will speak to what Mercy Corps has been doing. And Thea, before you get started, I want you to look at the responses from the last poll, and which speaks to what are the priorities for practitioners. And what is your reaction to this? So the response that got the most, which is about integrating financial inclusion outcomes as part of the humanitarian response. Do you agree with that, or do you, what is your reaction to this?
Sure. No, and that's actually something I'll be discussing as part of the presentation. Is one thing we found, especially going back to Nadine's earlier presentation, especially linked to cash transfers, is what we have found is that there's not an automatic link between cash transfers and longer-term usage of financial services. So if we actually want those outcomes to be part of the different humanitarian initiatives, they actually need to be integrated and included as part of the design. And we have a couple of recommendations of how different practitioners can do that.
Great. Please go ahead with your presentation.
Okay, great. So thanks so much. So first I want to provide a very brief background on Mercy Corps. We, as Mayada mentioned earlier, we work in 40 countries. We're primarily focused on countries affected by fragility, protracted crisis, and often work quite a bit in natural disasters, and increasingly in countries and regions that are facing economic and political crisis. We really look for impact at scale. We reached over 30 million people last year. That includes 8 million refugees, as well as host community members, and over 1.5 million farmers. We're currently working in some of the world's worst humanitarian crises today, so Afghanistan, the Lake Chad crisis in West Africa, Somalia, South Sudan, and Syria. From a financial services perspective, we have initiatives around 30 countries and often work at the nexus of humanitarian response and economic coping and recovery, really trying to look towards an eye towards entry points for longer-term financial inclusion. So linked to our work at the field level, we're really trying to build an evidence base as a feedback loop to influence our programming on financial services in crisis settings. So I'm going to briefly discuss two recent pieces of research. One is we explored potential pathways for electronic cash transfers to promote financial inclusion in emergencies through 3 different case studies, one in Bangladesh, one Ethiopia, and one in Zimbabwe, and also looking at different financial products in Indonesia to help mitigate natural disaster risk. So quickly, Mercy Corps manages the ELAN network, which hopefully many of you on this webinar are familiar with. It's a network of humanitarian organizations as well as commercial payment providers. Together with Save the Children, Action Against Hunger, we undertook a 3-country study over the past year. We looked at specifically looking at understanding pathways from electronic cash transfers to longer-term financial inclusion. In Bangladesh, we looked at an initiative that was an emergency flood response. In Zimbabwe, a food crisis response. And in Ethiopia, a more slow onset disaster was a drought. All 3 were very short-term emergency response programs, which is very common in humanitarian crisis, and each had 3 to 6 cash transfers sent to different recipients. So overall, what we found is that there was, after the period of the humanitarian cash transfer programming, there was limited continued use of the digital financial services. However, as I mentioned, these were short-term cash transfer programming. So again, a lot of what we found is a lot of the recipients actually needed to cash out of the system because they needed the funds for emergency purposes or consumption needs. We also found, again, which is very typical when using digital in humanitarian response, it may be individuals' first exposure to using digital channels such as mobile wallets. And we also found in the case of the Bangladesh situation, there's also very limited agent network in the area. And we also found that, going back to what Nadine was mentioned earlier, is that many of the recipients actually preferred or were more comfortable with some of the existing products that they'd already been using, especially some of the more flexible and informal savings products. For those that did continue using the mobile wallet or did use it beyond cashing out for using the funds, the primary uses were for mobile transfers and remittances, followed by purchases of airtime. Of the 3 case studies, Ethiopia was the only program that actually included financial inclusion as an impact objective. And it also had the highest number of continued usage of financial services after. We also included financial inclusion metrics as part of the design. We also had direct links with financial institutions, the payment providers, and Mercy Corps actually worked with the local government to organize IDs as well so that people could continue using the SIMs after the program ended. And we also incentivized recipients to store value in the mobile wallet. So interesting enough, even though there wasn't a huge amount of continued usage in these 3 examples, what we did find actually from both the humanitarian program staff and the program participants that there actually was a preference to actually use digital cash or use mobile wallets in future programming over traditional cash delivery. And some of the main reasons we're citing is that it was actually seen that it could be more efficient and it was much more transparent. So again, so one of the things going back to the earlier presentation, we also see that there are a lot of opportunities for continued usage of digital financial services linked to humanitarian cash transfer programming, but we also have found that it doesn't happen automatically. So first of all, that really needs to be built, the usage of financial inclusion needs to be built into the program design and objectives. That includes related success and impact metrics. A couple of other recommendations that we have is related to we really recommend segmenting recipients beforehand. So really understanding who has access and who has experience with mobile money, and also understanding different interests in financial services prior to the cash transfer program. Interest in actually storing value on the phone, savings, and money transfers. We've also found repeatedly as well is that it can be very beneficial to help support the purchase of mobile phones. As often what we found with vulnerable populations, either they're sharing phones within a household or even within a community. So offering potentially short-term loans, payment plans, or subsidies so people can actually own their own phone. One of the major issues as well is around digital literacy. For those new to mobile technology, digital literacy actually at the individual level we found to be most successful so that they can actually independently transact into the mobile wallet. And we also found, when feasible, to increase the number of cash transfers so recipients have more opportunities to actually use a mobile money account as part of the program. So a second piece of research that we recently conducted was in Indonesia. For several years, Mercy Corps supported hundreds of MFIs in disaster-prone areas, specifically looking at Yogyakarta and West Sumatra to help design and market financial products, so savings products, credit products, and bundled insurance to be utilized post-disaster. And when I say disaster in this situation, we're really talking about large-scale disasters such as earthquakes, severe flooding, tsunamis, and volcanoes. And what we found is that the financial services are important and do support household recovery. However, we also found they do not replace immediate relief needs directly after the disaster. People still heavily relied on family, friends, NGOs, and government for immediate cash and in-kind aid. Only after this short time period was over did they actually access the microfinance products. The products that we had been working on for several years with the microfinance institutions primarily were savings products, looking at commitment savings that could only be accessed after a certain period of time or triggered by the disaster. But what we found in our recent research is there's actually limited demand for this type of commitment savings. Even for post-disaster products, the preference was really for high demand, flexible, unrestricted savings. And we also found, again, echoing back my colleagues, is that there's limited overall demand for insurance at the household level. But again, we also found there's a very mixed understanding of the process of payouts and overall how to access insurance post-disaster. We did find for those that were interested in insurance, there was a higher demand by businesses that expected higher frequency of disasters and also expected higher loss of income. So in addition to our research in disaster-prone areas, we also work quite a bit in conflict and protracted crisis settings, increasingly with large displaced populations. we have two very active research initiatives currently in conflict settings to really test our assumptions around the use and demand of financial services, and also really understanding the role of financial services in these settings. Both of these will be released in the coming few months. So one is focused on Northeast Nigeria, doing a livelihoods and market recovery assessment, specifically looking at several agriculture market systems and trying to identify different leverage points that facilitate market recovery, looking at the role of financial services for host communities, displaced populations, and for returnees. We have a similar initiative in Syria at the moment, trying to understand what economic and market-related factors hold the greatest potential to strengthen household and communities' ability to productively cope with conflict and displacement. And the research has a strong focus on the role of financial services, really trying to understand existing debt burdens, the role of remittances and assets, and the role of social networks in financial services. And both of these will be available within the coming few months, hopefully trying to build to the evidence base that Nadine mentioned earlier. One of the things that I was asked from a practitioner point of view is to talk a little bit about some of the unique challenges of working in the financial services in conflict settings. Even though there are similarities with natural disasters, we also find that in conflict and in fragility affected regions, there are some very particular challenges. So I think one of the pieces is going back, for example, to the Indonesia example. When an earthquake happens, there's a pre-earthquake and a post-earthquake. But what we find in conflict settings, it doesn't really follow clean patterns. It's more protracted and reoccurring, so there's no pre-crisis state. We also find there's higher rates of poverty, especially if there's repeated cycles of violence. Large-scale market failure, we see quite repeatedly, and potential market distortion from some of the humanitarian aid, which can have a negative impact on the financial service provider sustainability and even interest for financial service providers to actually engage in the market. We also find much weaker consumer protection and limited support service. So, for example, even understand what consumer demands are in the market. One of the other key pieces from a practitioner perspective is we find lower levels of risk tolerance from end users and trust in not only government institutions but also in financial institutions, which leads to lower levels of investment. So while even though we find these challenges, we also see opportunities, both as practitioners but also for donors in this space. And I will touch just briefly on a few due to time. So one is really looking at different regulatory approaches. It's an area that practitioners actually have a responsibility to get more engaged in. One of the areas that we find, which I think actually was one of the questions earlier, is really advocate and supporting risk-based approaches to tiered KYC regulations. We find this extremely important to allow different levels of financial transactions and really to allow those entry points into formal finance for different populations. And that could be in natural disasters as well as for displaced populations. And it's especially important for increasing the role of remittances, digital payments, as well as larger mobile money services. Also, one of the areas is really prioritizing consumer protection regulations so that consumers actually have recourse to actually build trust in that formal financial system. Another area, though not applicable in all parts of the world, though we definitely see it increasing not only in the Middle East but in West and East Africa, is the role of inclusive Islamic finance, one for humanitarian crisis as well. So looking at regulatory and supervisory frameworks, for standalone financial institutions, but also windows within conventional financial institutions. Also looking at different opportunities for short-term land usage in conflict and actually after post-natural disaster for people to be able to access working capital and for housing upgrading. Another area is around identification solution. We really see ID as an enabler for the financial sector. So in addition to stronger national and foundational ID systems, there's really growing recognition for the need for interoperable digital IDs. This is especially a large discussion happening right now with the increased displacement populations. So for market segments, as Nadine had mentioned earlier, really one of the priority areas that we're looking at, and I know a number of other institutions are, is finance for refugees and for forcibly displaced populations. And that's displaced by conflict, but increasingly as well as climate-related displacement. There's a lot of opportunities right now exploring One is creating some of the user profiles for displaced populations to help segment the market, as well as understanding current levels of debt, and also really understanding what are the financial demands at different stages of displacement. Also linked to refugees and displaced populations is really the need to lower the cost of remittances. Another, looking at different financial products and instruments, one of the pieces which I know has been mentioned earlier is liquidity. So liquidity at the end user level, but also one of the things that we find often is liquidity is really crucial for the financial institutions, as they're also impacted by the crisis. So whether it be the physical infrastructure is damaged or clients' inability to repay, institutions actually need access to liquidity so the clients can access their savings in the case of a crisis. And lastly, one of the areas that we're working quite a bit in is really looking at the role of impact investing in different blended finance structures, and especially in conflict-affected regions, to really lower the risk for private sector investors and hopefully build a pipeline of small and medium-sized investments. So one of the things that's come out of it, obviously building on opportunities, there's also several recommendations. Some you've already heard from my colleagues, but one of the things that we find as a practitioner working both in natural disasters but also in conflict setting is really the need to invest in contextual understanding. And that doesn't happen just at the initial onset of a program and a baseline. It really needs continuous analysis of conflict dynamics in the political economy. That can't be stressed enough. Really so that we can also take advantage of windows of opportunity, new financial delivery channels that may be happening, new actors that are entered the market, or new market segments of populations that have arrived in the past several months or past several years after a program has begun. I think going back to the earlier question on the poll, it's critical to think long-term in crisis and really carefully sequence interventions. This goes back to the preparedness statement that was given earlier. Market-based solutions in the financial sector can really realistically take up to 5 to 10 years to reach scale. And in crisis settings, it can really take longer due to lack of institutions, lower capacities, and fewer counterparts. And that's why even if we have a short-term program that's focused on cash transfers, we have to think right from the beginning around segmentation and what do we want actually to come out of that in the long term and design accordingly. And that links really closely to what we already know. Even though we're talking about financial services and humanitarian crises, we still need to actually build on what we already know in this sector and what does and does not work for financial services and adapt accordingly. So understanding liquidity, customer preferences, push and pull financial products, customer segmentation, all of these apply in humanitarian crisis and should be applied. And also, back to an earlier statement as well, is just don't ignore the informal sector. What we have found in some recent research in Nepal is immediately after the 2015 earthquake, households with immediate access to formal credit and informal savings were able to recover at faster rates. And then in a follow-up study we did 1 year later in April 2016, formal financial institutions, people with access to formal financial institutions and social capital were the quickest to recover. So it's really important to recognize that one product won't work. Individuals in crisis settings really need a suite of financial products to store their funds, to save, to receive and send remittances. And then again, I think from a financial services provider perspective, also there's a strong opportunity for insurance, but we also need to recognize there's quite a bit of training and end user capability to understand the value of insurance. So those are quickly in the time that I have. This is my contact information, and definitely happy to continue this discussion offline as well. This is a growing sector, and for Mercy Corps, one of our priorities. Thank you.
Thank you so much, Thea. So we've just opened up the final poll question, and if you could just take a few moments to answer that. And it's about if you could do one thing differently to improve financial services in crisis, what would this be? I mean, we've heard from our panelists that there's a lot to be done, but we want to get to this issues of what are the most important priorities that all of us can do right now. And Thea, several questions have come in that I'm going to turn to you now and ask you a few of them while people are responding to the poll, and then we'll go back and open it up to everyone to get everyone's reactions on the poll as well. I'm going to offer a few more questions that have come in to other speakers. Thea, I know that Mercy Corps has been very involved in a CEAP-sponsored activity called the MARES, Minimum Economic Recovery Standards that were set. And one of the questions here relates to that. It's asking what kind of tools or mechanisms are required to bridge the gap between financial services and humanitarian organizations? Are the MARES not working? And if you could just take a minute to respond to that question.
Sure, thanks for the question. Yes, no, I would definitely say that the MERS is working, and for those of you that haven't, please download the latest version. It's up on the CEAP Network's website. I think for tools, I think it goes back to what I mentioned is around sequencing. Tools, individual tools alone are not going to lead to financial inclusion. It has to be sequenced, and it has to be a wide range, looking at both how are we addressing financial services at the end user level, but also at the institutional level and in larger market system level. And that's part of a larger initiative and larger thinking and, quite honestly, larger planning that often individual institutions or NGOs can't be doing alone, and one individual tool is not going to necessarily lead to success. So it has to be definitely much more of a sequenced and long-term thinking, even if you're doing it in an emergency and immediate response.
So this actually segues into the next question that I have for you, Thea, which relates to this issue of the coordination among different actors, humanitarian assistance and others. Could you speak to a little bit about what is happening and what more needs to happen related to coordination?
Sure. I mean, I think that can look different depending on the different type of response. But overall, from what I've seen, especially in the last couple of years, the coordination between not only NGOs, but also private sector actors, local government really is increasing, with the idea that, quite honestly, donor funds potentially shrinking. We need to obviously be spending much more thoughtfully and wisely. So I think it is increasing. I think there is more that we can be doing. And again, I think some of that really goes back to the planning. If it's immediately after the response, or if we're in a long-term protracted crisis, how are we pooling different resources and areas of expertise in the response, rather than trying to have individual programs that aren't necessarily related to other programs. But I do really see that over the last couple of years, and even most recently in different responses, that there is much more of a united process, so which is very encouraging. There is a ways to go, but I have been very encouraged.
Great, thank you so much, Thea. So I'd like to invite all of the panelists to react now to the last poll. And if you see I hope all of you can see the responses. The two that received the most are invest more in understanding client needs, and then the second one is invest in preparedness. And I'd like to start with you, Nadine, in terms of what's your reaction to that, and would you agree? And then I also have a few other questions that have come through that I'd like to ask the individual panelists. So first, Nadine, your reaction to the poll?
Yes, thank you, Mayetta. I think that's pretty much, for me, the two biggest learnings. Definitely invest in preparedness. As we saw from Olivier, I mean, there's practically no way to avoid that, to minimize losses and social impact. And in preparedness, I also see a role for the donor community to step in, but also for local governments to be concerned for what's happening, and definitely invest more in understanding client needs. And I'll just also use that to answer a question that was raised on graduation. Yes, this is definitely an area that is being investigated, including for refugee, and actually as part of the same project that led us to this paper, along with the colleagues at the World Bank, we're looking at graduation for refugees and impacted host communities, for instance. You'll find in the paper some references to what we know about graduation programs in those contexts. The one thing that we do not know typically is what is the role of financial services in isolation. And so perhaps that's another area of research or thinking, like as Olivier mentioned, financial services are probably not a solution on their own, but they need to be coming with a suite of other interventions. And the question is, how do you sequence those interventions, and how do you maximize your impact based on how you sequence those.
Thank you, Nadine. Olivier, can you perhaps react also to the poll? Is this, would you agree with these responses? Is there something missing that you think is critical?
No, first of all, I would say that among the options, I mean, all of them are quite important anyway, so it's difficult to pick some of them. Now, in terms of preparedness, just to elaborate, again, preparedness as a standalone may be a bit tricky. Usually, particularly in the concept of disaster risk management, we see it as part of a broader agenda. We have also risk mitigation, risk financing, and of course reconstruction. So what we have learned over time is that you need really to combine all those elements, preparedness in that case, with other types of activities, risk mitigation, for example, to make preparedness even more efficient, number one. In terms of climate needs, definitely. And as I said, I mean, in the specific context of disaster risk finance, this kind of initial diagnostic with the clients we found is extremely valuable. First of all, because you don't want to come up with a kind of ready-to-use solution. And sometimes, I must say, particularly in the insurance industry, this is where maybe the private sector may tend to come up with some, ready-to-use solutions. But it's very important to understand exactly what are the needs of the clients and their priorities, because of course their need will be huge, but their priorities we need to help them to prioritize. So yes, client needs and priorities are definitely something to consider quite significantly. Thank you.
Thank you so much. Sophia, any reactions from you on these responses?
Thanks. Yeah, no, I would definitely agree. I think there's quite a bit of assumptions, especially on and client needs, especially for displaced populations. I think there needs to be quite a bit of work in recognizing that different populations' needs are very different depending on different market segments within the populations, but also different geographic contexts. But there needs to be a much better understanding of how people are already, potentially funding their transit, how they're storing funds now, and really what and when they need different financial products, and what that looks like and who is the appropriate financial service provider. I'd also say looking at preparedness, yes, that's a huge issue. And going back to the original, one of the original focus points was on cash transfers. Actually, Mercy Corps, in partnership with NetHope and USAID, is looking at this issue right now in Democratic Republic of Congo and Mali, specifically around how can we better preparing both ourselves as an agency and working with different mobile network providers and end users, so that when cash transfer programming takes place, one, it's a smoother process, people can receive the cash sooner, but really also how are we segmenting the different populations beforehand so that we can target different members for continued use of financial services. And those are tools that we're working on right now, and they'll be available just in the next few months for public use.
All right, great, thank you. So there's a few more questions that have come in, so I'd like to share those with everyone and then ask a few of you to respond. So Nadine, a question has come up related to forcibly displaced people and different kinds of products that are relevant for them. The one questioner is asking whether it's enough to just promote financial services generally, not necessarily specific products, and to leave it to the financial service providers to do the rest. I was wondering if you could have, if you have a response to that question.
Yeah, I think I'll have a two-part response. I think first, and this is probably one of the lessons from research that will soon be published that we've conducted in Jordan, for financial markets to work for a relatively small segment and a particularly vulnerable segment, it first needs to work for the others. So yes, you first need general access to financial services, general payments infrastructure, and a financial sector that works decently well with specialized providers. Now, whether on its own it's enough, I mean, clearly not. And there's a lot of work that has gone recently into trying to provide financial services to refugees. It doesn't come naturally. And here I think there's a role for incentives to be given both to the private sector and to the humanitarian sector. I saw a question a bit earlier on the role of financial service provider in assessing the creditworthiness of refugees. I think this is clearly what we've seen even from the latest experiments. The refugees, the ones that receive cash transfers or that are mapped out by the humanitarian agencies, are usually the most vulnerable. And even the least vulnerable of them are sometimes still considered too poor for financial services providers to serve directly. So the question of sequencing that I was mentioning before, and the question of how do you actually take the least vulnerable to the next state of where they can actually have a minimum livelihood, and which financial services are useful at which stage, are things that we still need to answer. But clearly it will not come on its own because of this gap between what a financial services considers as a minimum viable customer and what humanitarian agencies considers already as somebody who's a bit less vulnerable.
So thank you. There's another question specifically about refugees who are not officially registered with UNHCR, so who may not have the proper identification to qualify for formal services. And maybe we can go to Thea, and then after Nadine, if you have anything else to add. And how would you deal with that issue in terms of supporting financial services for that segment?
Sure. I think it's a very common issue in a lot of different situations. And I think partly even if UNHCR is doing registrations, if there's mass movements of people, then there still takes time to actually register everyone. We see that even happening today in Uganda with South Sudanese. I think there are some immediate opportunities. One, looking at the graduation approach, as Nadine was spelling out. But there's some immediate opportunities with setting up different savings groups. We've actually had quite a bit of success with that in Nigeria. The other piece, I think, as well is there's opportunities if people can't access, potentially formal credit from a financial institution. There's opportunities as a practitioner to really explore different short-term financing mechanisms within different value chains as well. As potentially as refugees want to set up, small micro businesses, how can we be working with other actors to provide maybe financing more at higher up the value chain and versus directly, small grants to the refugees. And that's something we're exploring, and I've seen some examples of that as well in Uganda.
Thank you. Nadine, anything to add, or can I move to the next question?
I think for the sake of time, let's move to the next question.
Okay, so very closely linked to this issue of formal versus informal is this issue of seizure of savings in a crisis situation. So what could be done to protect against someone running off, just say if it's an informal product, someone running off with the savings, or if it's a formal institution, the government seizing savings. I don't know if which one of you could answer that question.
I can give it a shot. I mean, on the government seizing savings, I think we haven't seen it a lot. I mean, in the type of financial service providers that we work with and that specifically serve the poor. And that, I mean, it's a risk that you can't really mitigate. In the informal groups, there's always a risk that's here. And I think as Olivier was saying, it's a balance to strike. And perhaps to come back a little bit to the earlier question, in a lot of developing markets, and that's not always something that donors have in mind because they live in formalized economies to the vast majority. In developing countries, we're talking about sometimes 80 to 90% of the economy that is informal. So there is a gray area where if you don't have an ID, you might still find a formal provider, an NGO, for instance, that would serve you with a financial service. The question is this sustainable? Can they do it on the longer run? And how can you progressively get a little bit more formal, help you with getting an ID, etc.? I mean, those are the questions that we need to think of, knowing that it's essentially a matter of striking the right balance, because we'll never get it right 100%.
Great, thank you so much. There will be one last question and then we'll close. And this is to you, Olivier. I wanted to ask you, what is your perspective on the role of donors in ensuring funds reach the desired beneficiaries, especially in areas where political patronage and corruption is supreme? Any words of wisdom on that?
It's a very complex and sensitive question, and what we've been trying to do as much as possible is to leverage on existing mechanisms, whether they're supported by donors and whether they're supported by governments. And in the case of Africa, as you know, of course, donors are working very closely with governments. There is definitely need for more transparency, for more efficiency. And as said, in the case of social protection systems, this is where the World Bank has been investing a lot of efforts to build this kind of infrastructure around safety nets, and we see that as a nice and efficient way to transfer funding. Now again, the challenge sometimes is whether you want to use government system versus non-government systems. I don't think there are any rules, and it really depends on the efficiency of those systems. Now, bringing the private sector sometimes can bring more transparency and more efficiency. So this is also one reason sometimes also to focus, in the case of disaster risk finance, on risk finance in general, to focus on insurance sector, not only again, as I said, to provide capacity, but also to provide tools to make the system more efficient, more transparency, and ultimately more accountable to the government, to the beneficiaries. So all of the private sector can help to some extent address some of the issues you mentioned.
Great, thank you so much. So before we close, we're just on time right now. I just wanted to mention that there are several, you see in front of you the links to the available resources. So the recording and the presentations will be available on the Microfinance Gateway at the site listed there. CGAP has been running a blog series, and so there's a few blogs related to the link to the paper, delving deeper on some of the issues that are raised in the paper. And then, of course, the actual CGAP-World Bank forum publication is available on the CGAP website at that location. So thank you all for participating. We had a fairly large turnout, and thank you for all of your questions, and thank you also to the speakers. Have a good day.
Thanks, Mayeda.
Thank you. Goodbye.
Thanks, everyone.